This is Christian Farmer, Market Trade Group, and this is your end of day market recap for Tuesday, December 30th. We've got one more trading day to go for the end of the year, and it feels like the markets are going out on a whimper. Maybe they could prove me wrong for tomorrow, but it has just been a constant kind of bleed lower for the last few days in the market. Looking at where we are for number one for the year, I'll just kind of recap some stats because today was extremely boring price action for the indices. Couple standout names I could talk about, but there really is not a lot going on here. For the year, S&P up about 17%, Qs 21%, mid caps up 7%, and the small caps up 12.3%. Looking at month to date, and I believe this is accurate, but I'll double check this, especially as we finish the month. But you now have IWM negative for the month, down 0.3 of a percentage point. SPY is just up 0.6. Qs are essentially flat, and mid caps are outperforming a little bit. ARC Innovation just kind of shows you like high growth stocks down 2.2%. Also the IBD 50, which has been, these two things have been underperforming for the last few months. They continue to also underperform a little bit in the short term. Performance for the day, a couple of things did okay today. Energy stocks saw a lot of call buying today in Oxy. Talked a little bit about Exxon yesterday and about how that's breaking out. XOP, oil and gas stocks were up 1% today. Not much else really to the positive side. GDX was up 1.4%. I think the silver miners also did okay today. They bounced back today. Let's see if I have them someplace, but I don't see them in front of me. Also, DBB, which is your base metals, also came back quite nicely. But as you can see, a lot more things kind of going to the downside. Qs finished down 0.2% this morning, kind of ending right where they started for the day. Let me just go through the indices really, really quickly for you. The main thing that I see looking at this SPY chart here, and I'm going to remove myself here so that you could see just the chart, is, again, this has kind of been the situation. And again, I'm trying not to complain too much, but when you look at the last 3 or 4 months, yes, we're kind of at the top of the range, but it's really been kind of a tough move. We just really haven't had that much upside movement. Once we kind of get to the top, whenever we start to kind of get to the highs, we don't have any follow through and we kind of break back down. And that's where we are right now. We're back below the 5-day moving average. We're still above the value area for the month. We're still above the 20-day moving average. We had a nice move from the middle of December, but again, we're just kind of leading, we've backed off from that. Qs, the level to watch remains for one more day because we only have one more day of December and the value area there, but that's 619.14. We've been holding it, but again, just kind of moving to the downside. And that's been even more observant when you look at the IWM. And IWM had this nice move, right? This was back on the 22nd. And then since then, we kind of we went sideways for a couple of days, digestion, which this is normal. Then we leaked lower there on the 26th, and then we just continue to kind of move lower here. So it's not the best price action in the world. And, going back to what I was saying about not really doing much for the last couple months, I think Qs kind of gives you a good idea of that. The end of October, we're basically back to where we were in the end of October. So it's just been kind of sideways price action for the last couple months. What else do I want to go over? Well, I think the best name today was this FTAI. That's a really nice looking chart. Let's see if this name continues to get followed through. Look at the volume. Love to see volume on that, but look at the weekly chart. That's a really nice looking cup and handle type pattern out to new highs. So I continue to like this group. That stock did have some news today. If we're looking at the ITA, which is the aerospace and defense ETF, that's been digesting. Again, just touched those new highs and has been coming back in. A lot of your stronger charts, in my opinion, have been doing that. I mentioned Exxon yesterday. I forgot to go over it. I did get long Exxon yesterday. Again, it's, today, hey, it outperformed today, up 0.4 of a percentage point. And So nice to have something. Again, it's a little bit of a sarcastic laugh here. The one, but it's nice to have something that moved to the upside today. Couple other things that I was going to share with you, and we'll end the video there, is just something that you've heard me talk. If you've been watching my videos over the last couple months, you know that I've been talking about positioning and about how this market at this point, the equity market needs rate cuts, right? Why do I say that? Why did I say that in all of November as well when we were moving down, right? Because of the P word, right? Positioning, right? It's because margin balances are at all-time highs, right? The individual investor is all in on this. So that's really what this market, that's really why I think that we need rate cuts, is because of the positioning. It is the all-in market. You've got individual investors positioned the most leverage in history. You've got institutional investors, no cash on their balance sheet, right? They're fully deployed, as we heard about in the fund manager survey from Bank of America a couple weeks ago, right? And then you also have analysts who are all in on upside price targets, right? This is the all-in market, right? So what is going to need to propel this market? Aggressive cutting of interest rates, right? We are still at a tightening rate. We are at 3.75. Please don't think about like the incremental, like up or down by 25. Oh, we should or we shouldn't be cutting interest rates. Please don't think about that. Think about the what the rate is right now, right? The rate is a tightening rate. We're at 3.75, right? So unless we get more interest rate cuts, I believe, unless we see some type of market dip correction, which will kind of clear out some of that over positioning in the market, it's going to be very difficult for this market to have big advances going forward. That's my opinion. And again, where am I coming up with that? It's just looking at the overall position, how individual investors, institutional investors are all in this market, and if you don't have rate cuts, it could be a potential problem. Right now, we're only anticipating 15% of a percentage chance that they're going to cut interest rates January 28th. Now, there's a lot of time. We have a whole month of data that we're going to get that could change things. But right now, that's why the market, in addition to many people have kind of closed their books for the year, but that's why you're getting this price action and why you're not getting a Santa Claus rally, is because individual investors are all in, and we're not going to get a new Fed president until what, May, June, right? So that means the possibility of rate cuts. That's why there's, so again, second half of the year next year could be good once you get those rate cuts. Or if we see I think the market does need some type of correction to get folks to unwind some of their over positioning. Again, that's kind of a dark view right now, but that's the way I see it right now. And just looking at this price action and what we've seen, it just doesn't seem like there's any incremental buying. Again, doesn't mean that there can't be rotation. I think that there could be rotation. But for now, it is what it is. I'll leave it there, guys. Have a great night. And one more day to go for 2025. And then we're on to a brand new year. Have a great